Forming a higher time frame bias shouldn't take you more than 10 minutes a day, yet I see so many traders messing this up. So if you struggle with higher time frame bias, I've made this video for you. I use 4 basic concepts every single day to master my daily bias, and in this video I'm going to break down exactly how I do it on the S&P 500 futures. Last week I caught some of the move down here, very large sell-off on the S&P 500 futures on the 3rd of February. So essentially this entire trade simply came down to a 15-minute or a 5-minute opening range breakout. Now, one thing that I often see traders do is they focus and they obsess on this breakout. So they look at the 15-minute high, they look at the 15-minute low. Now the problem is sometimes the setups work and sometimes they don't work. So in this video, I'm going to be going over how to find a higher time frame bias so you can be on the right side of these range breaks. So before I even speak about the 15-minute orb, let's take a zoom out and understand where we are in price, right? So this was Tuesday, the 3rd of February. So this was the setup over here, right? So let's go to Tuesday, the 3rd of February. Now, what's interesting to understand is that on the Tuesday the 3rd, I already have my key levels defined. So I'm just going to go over on a fresh chart how I find these key levels, right? So this is the S&P 500 on the 15-minute chart. Now, I'm just going to be breaking down a few basic concepts, right? So I start off with marking out structural low, structural high, structural low, and then the structural high over here. So these are my basic 4-pillar approach, which I go through in every single day, every single video. So structure low, structure high, structure low, and then we have our structure break over here. So this is our current market structure, right? We understand we're dealing between this low and this high. And so anything you see in between, right? So all these lows, all these highs, all these lows, all these highs, these are all internal to the overall dealing range. And so understanding your dealing range is one of the most important things. So your dealing range is going to be from this most recent low up to this most recent high, right? Most recent low to most recent high. Now, once you understand that, you can then begin to find your key levels. And so one question I get is, how do you find a higher time frame bias and how do you ensure you're on the right side of the market? Well, the way you do that is by finding key levels with 2 basic concepts, right? Premium and discount and weekly opening price. So this is what I'm going to be going over. So if you look at this market structure over here on the left, let's kind of break down what we're talking about. So we have a structural low down here and we have a structural high. So anything in between is internal, right? So this is the dealing range we're focusing on. So we have, of course, a dealing range low and we have a dealing range high. And so what we're looking to do is we want to use the fib correctly. Now, the way to use the fib correctly is to simplify your approach. So you have a structural dealing range low and you have a dealing range high. So what you're looking for is a key level to short from in this region, right? Just like this. This is basically what you're looking for. So it's very simple. So the 4 steps, right? Step 1 is you're looking for market structure, right? Step 2 is you want to identify your dealing range, right? This low to this high, right? That's step 2. Step 3, are you in premium or discount? So we're in premium. So this is going to be step 3. And step 4 is identifying the key level. So this is how I find my key levels. So if we go to the charts over here, what you're looking for is a 15-minute fair value gap. Now, if you're looking at this chart over here, hopefully if you've had any more than 1 or 2 years of experience, you will find that this here is a fair value gap. This entire region here is a zone. This is a fair value gap. Now, for me to find my key levels, I am looking at the candle or the range before the fair value gap. So let's kind of dive into this and understand. This is one way I find my key levels. So what I'm looking for is, for me, I will use this wick and this region over here as my key level, right? That is basically how I find the key level. This is one way to do it. This is one rough way you could do it. So here is my key level over here. Now, it doesn't matter that we've kind of broken above it, that we've mitigated. That doesn't matter, right? The only thing you need is you need a 15-minute fair value gap, right? And you want to see how price reacts in this region, right? That is how you find your sort of higher time frame bias. So higher time frame bias comes from using intraday fair value gaps with one other concept, which I'm going to break down. So just by looking at this over here, what we can see from our diagram is that we are in premium, right? This is what the P stands for. We are in premium, right? And on step 4 is we found our fair value gap. So this is what I call the 4-pillar approach. And so the 4-pillar approach is you need market structure. This is very important. You need to understand your dealing range, right? Where is the most recent high and low? And then with that most recent high and low, you project the fib. So you want to understand your PD arrays. And the last thing is you need to understand your fair value gaps. 4 basic concepts I use every single day without fail. Now, the next thing to use is what I call the weekly PO3. Right, this is the weekly PO3. It is the most powerful indicator you can use in the whole of TradingView, in my opinion. So this is the weekly PO3. Now, what do you see here? Right, what do you see here? So the most important line is this line here. This is the weekly opening price. I'm just going to write WO. This is the weekly opening price. So if you don't know how I use this indicator, basically you go to indicators, you type in PO3, and you scroll all the way down to higher time frame power of 3 by 2 degrees. Just the free version is fine. You don't need the locked version. The free version is fine. So if this is your weekly opening price, for those who don't understand how a weekly candle works, the way that a weekly candle works is if we want to go down, right, the best shorts are going to come above the weekly opening, right? If we look at the way this particular day played out, we saw a huge short from this level, right? Huge short from this level. Now, what's important to understand is this, right? This is sort of where the level was, and this is where the weekly opening price was. And so what you're interested in doing is shorting above the weekly opening price, right? This is roughly how you want to be. You know, the best shorts or the biggest shorts will come above the weekly opening price. And so this is how you want to think about it, right? This is the size of the first wick, right? This is wick 1. Now, if you look at the actual trade, right, you want to catch some of this move over here. So what you're looking to do is basically be in the trade before the wick increases. You want to position yourself inside of the wick and take the best trades inside the wick, right? That is how you use the weekly opening price. So now, once we understand this, we want to go back to our diagram over here. So our diagram says that the weekly opening price is here. This is the weekly opening price, right? Weekly opening. Now, if this is the weekly opening price, right, and you're in premium, this is what gives us a bearish daily bias. So if you struggle with daily bias, it's because you're missing one of these two concepts, right? You want to be shorting in premium above the weekly opening price. Then from here, it becomes easy to catch these shorts once you have a key level. This is basically how the markets work. Every single trade you take needs to follow these basic steps, right? These basic parameters, which I think every trader should know or should understand. So if we go back to the charts now, right, I'm going to be going over to ES, and we're going to be breaking down how I caught this initial trade, right? So my level on ES was a little bit more precise. It came from the 13th of January, right? I trade ES. That's the only market that I trade. What I'm seeing here is multiple reactions at this area. So once I know where the market is absorbing, in this case, buyers, I'm happy to take a trade there, right? So that's how I sort of find my daily bias. Choosing a daily bias shouldn't be difficult. Once again, just for argument's sake, this is the EQ, right? This is the EQ. This is the weekly opening price. We want to be shorting above the weekly opening price, right? That is the basic logic behind the trade that I take. Now, breaking this down further, let's go to market open, right? So going into market open, this is what's important to understand, right? This is the trade itself. So going into market open, I already have a bias. Now, I don't marry my bias. I'm willing to change my bias based on what the order flow does, right? I'll repeat that. I'm willing to change my bias based on what the order flow does, right? So I want to see what the order flow is doing, all right? So let's get rid of the candle. So I already know from an execution perspective, we are well above the weekly opening price. We are also in premium. So the market has reason for lower prices. Now, I don't jump into a short. I want to see confirmation at my level. So this is where the order flow comes in. This is where the execution comes in. So I do have a few different entry models I want to break down, but the main entry model here, for those who know it, is a 15-minute range break or a 15-minute opening range breakout. So let's kind of understand what was going on here. Now, from here, we had a bit of a choppy open for the first sort of 15-20 minutes, but I'm interested in the market open. So the blue is before the market, then the gray is the market open. Now, from here, this is what we want to look for, right? So we want to kind of analyze the first 15 minutes. So the first 15 minutes in yellow looks a bit like this, right? Here's the first 15 minutes. So what are you interested in, right? So you're interested in the 15-minute high or the 15-minute range high, like this. And you are interested in the 15-minute range low, like this. right? This is what we're interested in. So the three basic steps from a lower time frame perspective, once you have your higher time frame down, is you're looking for a key level, right? The next thing you're looking for is an entry in the key level, meaning if we are here or here, we don't trade, right? We don't trade. We have to trade when price is tagged into a key level. So these are the three steps that I use. Step one, key level. Step two, buyers and sellers. So this is where the order flow is needed. So my execution for that day came at this price. So 69.99.5 went in with 7 contracts on MES. First target down here at $533. So roughly a 1 to 1.78 risk reward. Now, in order for us to understand what was going on here, we need to understand. So if I just hop up top, go to let's stay on the 1 minute. If you look at what was going on here, first sort of 15 minutes, right? We want to see what was going on here, right? This is the first 15 minutes. 15-minute low and 15-minute high. So essentially what we're looking for is we want to know if we break to the downside, what was going on here? Because this is what's going to confirm our entry, because this was a short trade, right? Now, let's take a look at the order flow. So this is now a 5-minute chart of ES, right? So if we just take a look at this 5-minute chart, what do we see in the zone? So again, this blue box is the same as this gray box. What do we see in the zone? This is quite important. This is a very important point. So if we break this down, what we can see here is a lot of blue inside of the zone. So what we see here is blue delta, and then we break to the downside, just like this, right? So what was going on here specifically, right? This is blue delta. Now, what does blue delta mean, right? Blue delta just means that there are more aggressive buyers than sellers. It's as simple as that. More aggressive buyers and sellers, right? That's what's happening at this key level. So let me ask you a question now. In real time, if you begin to see this, right over here, if we break below the zone here or break below the 15-minute, were these aggressive buyers over here successful? That's the question you want to ask yourself. You want to ask yourself who is aggressive and who is being rewarded, right? That's the only thing order flow comes down to. Who's being aggressive in the zone? Buyers are being aggressive. Blue delta and blue delta. But we break below the zone and we break below the 15-minute range break. So who's being rewarded here, right? It's not the buyers. This, in fact, is what we call a buyer absorption. Like this. This is a buyer absorption. The fact that we've broken the 15-minute low despite having lots of buyers over here, this confirms that sellers are in control, right? And you want to be shorting when sellers are in control, right? So this is my short over here. So my short came at 1 minute break, 1 minute retest. Even when we begin to look inside this retest, right? Let's dive into the retest in a bit more detail. Right, here's the 1 minute break. Here is the retest. Now, for me, as long as so this is the initial break on the 1 minute. So I'm looking at the low of the body here. So there was my entry. So my entry came at around 7,000 or just beneath 7,699.5, right? There was my entry. So what's going on here is I'm interested in this order flow retest. So here, these candles here, 1, 2, 3, 4, 5, 6. 6 minutes worth of data. Right, 6 minutes worth of data. So that data corresponds to these candles over here. So 1, 2, 3, 4, 5, 6. Right. So I get lots of questions. What do I look for? How do I enter? What is it I'm looking for? So the short answer is you need to put in your own screen time. Right. Putting in screen time will give you the experience that you're looking for, not watching this video, right? This video gives you guidance, gives you tips, gives you things to look for, but until you backtest this and forward test it and do it for yourself, you're never going to get the relevant experience that you need. So what we're looking for is, yes, we have a range break, we have the high, we have the low, we have tag into a key level, and then we begin to break the key level and the low, right? So we break these areas. So what this represents now is we can go short. Right, we can go as the price was, rallying towards the low. I went short around about here, stops just above the level, and going back to what I spoke about previously, right? If we take a look at the weekly opening price was all the way down here. So what I'm trying to say to traders is this trade had a huge amount of runway, right? This trade did have a significant amount of runway, and we did see that, right? We saw the market melting in our favor. Right, so again, this is part of the whole daily bias sort of thing, right? So If we're looking at the daily bias, right, what you want to see from a daily bias higher time frame perspective is this is the weekly opening price. We're well above the weekly opening price. We're also in a premium. We've also tagged into the level, and most importantly for entry, we have a lot of aggressive buyers that are not rewarding. So if you are struggling with daily bias or you're struggling with execution, you want to first get your daily bias right. You want to understand where price is. Are we above the weekly opening price? Are we below the weekly opening price, right? So let's quickly go through this in order. The first thing you want to do is you want to identify your market structure, right? You want to know where your highs and lows are. The second thing is you want to know where your dealing range is to then find your premium versus discount. So in this case today, we were in discount. We were sort of above the 50%. That's the first thing. Sorry, that's the second thing. The third thing is you have a fair value gap, which then leads to a key level, right? So these gray boxes here, these are my key levels. A quick tip about levels is you don't just want to choose any random fair value gap. You have to choose a fair value gap that's actually backed with the order flow, right? Now, once you have that key level, you then want to ask yourself, where is that key level? Is it above the weekly opening price or is it below the weekly opening price, right? So below the weekly opening price. And the final thing is just using order flow as a final confirmation, right? That's your final step or your final confirmation, right? So once you have your basic market structure highs and lows, once you identify you're in premium, once you're above the weekly opening price at a key level, and you have order flow backing your trades up, that's basically how to short, right? That is literally what you want to do if you want to take a short trade, right? So everything we've covered today is from higher time frame bias down to daily time frame direction.